Bears are definitely eyeing the S&P 500 and the Magnificent Seven and drooling, but they're waiting to pounce because the technical signal has not confirmed bearish. All that's happened between today and the last video that I made showing you guys that we actually have had a confirmation break above an extremely bullish ascending triangle. The only thing that's happened is that we've just had another day that we've moved inside. We've yet to get that momentum move to break above the next level of resistance. So we're moving sideways and we're entering Q3 earnings. By this Friday, we're going to get the bank's results. And that's also an indicator in and of itself, because if the banks show health and are showing that they're making money and they're profitable, it means that they're not too afraid to lend. And it means that people are not too afraid to borrow. And it means that the economy in general is strong. Now, this is a big week. We've got NVIDIA started their 3-day event. It's partly why NVIDIA stock has driven up, but it hit resistance. It was a target that I gave pre-market this morning. I told everybody where NVIDIA was going to go. I gave some great guidance in the technicals. If you were looking and reading carefully, I gave everybody calls if we get above this number, puts if we get beneath this number. On the SPY, if we get beneath 570, this thing is going to collapse. It absolutely did. Now, we are developing a head and shoulders pattern on the S&P 500, and it's bearish. But it's only bearish if it breaks, okay? So we can bounce along the top of this pattern, and then the pattern can be canceled. You say, well, then if it could get canceled, why are we worrying about it? Why are you talking about it? Because if it gets confirmed, we have a pretty good idea of where the market will go. I'm going to take you guys into the SPY chart here in just a minute. And of course, we know that this is the big week for Tesla. Tesla chart collapsed. Price broke down today, but we're still moving towards an event on Thursday that could be a game changer for the stock. It's all going to come down to whether or not the market really likes what Elon's got planned. And he's already been sending out some clues that Tesla is more than a car company. We know this storyline. And he's saying, you know what? Robots. Think robots. And so I think he's going to pass off some improvements on the robots, but we need tons of improvements and we need delivery dates. And if he is not prepared and he's not ahead of schedule, the market's absolutely going to trash the stock. And so no matter what, this is a week to really think through your Tesla investment. And normally what happens with me is I get stopped out of my investment, which I did last week. And so largely I've been just kind of watching for the right moment to enter in more, increase my position. I've just been day trading Tesla right now, and I'm just sort of watching what I should do. And so more than likely, based on my trading normal strategy and the way that I handle Wall Street, I'm probably going to wait and see what it does, even if it means I miss some of the run up, or I'll just jump in after hours. I won't be able to nail and get the very best leverage Tesla trade as a result, which means I'm going to leave some money on the table, but I'm also going to leave some risk on the table. And that's okay with me. It's not everything can be a lotto trade. I made really good money buying Tesla up underneath 220, getting it all the way back up to 245, I think is where my stop loss kicked me out. We've made a ton of money. We took the risk at the right moments. Now, before market closed today, in the Stocks with Josh Discord, the Chart Goat University, I alerted a new trade on the 3K challenge, and there's a ton of risk on it. Okay, Tesla's a bucking wild Wall Street horse, and so we could get thrown off that trade. And I hate to lose, but it had dropped so much. And in the morning time, I had identified an inverse head and shoulders, possible spot where Tesla could come back and could pop and move back up to that neckline. So decided to call out a buy alert on TSLL, which is a 2x leverage long ETF on Tesla. The implied volatility on Tesla options and TSLL is ridiculous, but I'm expecting a big move this week. So it could be profitable, but we will keep it on a very tight leash. We may not accept our normal loss. We may not accept it this time. We might just cut these if they don't immediately move in our favor. Want to keep risk at a minimum, but that's the call for the 3K challenge that I made today. as well as some really solid technicals that were alerted from pre-market and throughout the day, giving everybody the entry points for longs or shorts, and it really did prove to be accurate. Make sure you come and check that out. I have to give a shout out to Airtwan and Miss Mary. These guys are crowned traders in the Stocks with Josh Discord, and they provide a ton of technical help. And they're going to begin to co-host a session on Sundays, 7 p.m. Eastern Time. As part of the university, they're going to be doing some basic introduction to charting. Now, if you need to invest weekly and you need to be able to ask questions and follow along in a dialogue, this I think is a wonderful opportunity for you to grow and learn how to chart. Because I can tell you right now, if you're not trying to chart these markets, then you are really flying blind and you're just making expensive lottery tickets. I'm going to leave a link for the Discord in the top pinned comment, but this time around, I'm not going to leave my regular link. I'm going to leave a link that takes you directly to supporting Airtwan and Miss Mary. So if you like what they've been doing over the last couple years, then go ahead and hit their link and join and begin to participate in that new university channel that they're going to begin to co-host. So let's talk a little bit about the markets. Why did the markets fall today? Well, it's really fear. It's rising cost of oil. The 10-year Treasury yield popped back up, and that basically meant that people were getting afraid of putting money in the markets right now. Maybe they think the markets are too expensive. Maybe they think Q3 earnings are going to be the beginning of the sell-off. Either way, they started driving up the yield on the 10-year Treasury. In addition to that, the cost of oil is going back up, and it was bullish for the markets when the price of oil was coming down because that will ultimately play or impact inflation. And so the price of oil is going up because of the conflict in the Middle East. And so if that can get resolved, which there's no knowledge, no timeline for that to get resolved, it could escalate. But if it did get resolved, then that would take some pressure and some fear off of the table. Today, there was just an increase in fear in the markets. And so people started to take a safety trade or a more cautious trade because of those two factors. But the real dynamic comes down to what is the data going to be this week? And there's a ton of data coming out. So this is the Stocks with Josh show. Thank you for joining me. Thank you for hitting a like. Thank you for hitting the subscribe to get this daily content on my investments, as well as I really focus on trying to teach you guys how to better understand the markets and the charts. So hit that like and subscribe. I'm going to take you into the SPY, and I'm going to give you a prediction for this week. I'm going to take this prediction to the bank. I'm going to trade the prediction I'm giving you today, and I'm going to give you the same thing I gave you today in the Discord, which proved to be profitable if you followed it to the T. Someone asked me, well, Josh, how do I follow this alert that you've given? I said, jump in the minute the price drops beneath 570, enter puts, a momentum trade down. If you had did that, you would have printed well over 100% profit. And I didn't just give technicals on that. I gave technicals on a number of different plays. All of them would have worked perfectly today. But I'm going to do it again. I'm going to give you guys a prediction on the SPY, and I'm going to tell you again that if these numbers get broken, you can take it to the bank where the market's going to go. Because technicals are actually pretty easy. There is no guarantee that they will go the way that you think they'll go. But if you spend enough time learning them, you definitely begin to see the patterns develop. And oftentimes, they do go that way. And if they don't, well, then you make sure you use a stop loss. And so when you're wrong, you're going to lose a little bit of money. But when you're right, you should be making a ton more. All right, let's go over what is going on this week in the markets, because it is an extremely full week with data and the kicking off of Q3 earnings. So Wednesday, we've got two big things I'm going to be watching. We got the release of the FOMC meeting notes. Another big speculation as to why the markets pulled back is because those job numbers were so good. There was this idea that the economy is doing better than the Fed thought, that his aggressive cutting might cause inflation to flare back up, and he may not give those additional cuts that were expected later this year. And so there's a fear that he's not going to produce as much easing that's already been priced into the market based on previous data that we had. And so finding out what's in those FOMC meeting notes will drive the market. That's Wednesday at 2 p.m. Eastern Standard Time. Then we've got APLD earnings, Applied Digital. Now, this is one that I did alert but I didn't alert it enough. I'm going to acknowledge that I missed the boat. I saw the charts. I made a few comments in passing in the Discord that it was a buy at $2.50 and a buy at $3.50, but I should have done a video on this because it's absolutely skyrocketed. Now, we are getting ready to get their earnings on Wednesday, and a lot of success has been priced in. So this is a moment where things could potentially reverse to the downside or break out to the upside. And I think the charts are pretty clear on this one. It's sitting around $7. And I think that if it recaptures and moves above $8, that's going to be another buy signal. But it's not until it actually gets above $10 that it really is going to take off and squeeze. But at the same time, I'm going to advise with APLD that you want to be more cautious because it's run up a ton from $2.50. And if there is any problems that have not been priced in, it'll be profit taking at earnings. So it'll turn out to be a buy the rumor, sell the news. So be careful with APLD. Their earnings are Wednesday. Then Thursday, we've got jobless claims. We've got initial and continuing jobless claims at 8:30 a.m., an hour before the market opens. Thursday, that absolutely will move the market. We're looking for confirmation that the jobs market is okay and that inflation is still coming down. And that makes everybody believe that it's a Goldilocks environment. And the only thing else we'll need to add to that is some good Q3 earnings, and the markets can give us that blow off top that we've been talking about and looking for. And then, of course, Thursday night, 7 p.m. Eastern time, robo-taxis, and we're in a Tesla play. So I'm really hoping that tomorrow the market begins to give Elon the benefit of the doubt and that we run up as we get closer to that event on Thursday. That would just be perfect. And then a blast off if the market loves what he says. There's a lot of ifs on that. I will be honest, my position size on Tesla is going to remain small until we get the data. Because let's say it's a terrible event and the market doesn't like what he says and it just gets slammed down. Well, I'm likely going to go short on Tesla for the next couple months because I think they would not have the momentum to break out of that historical descending line apart from absolutely incredibly good data coming out at this event. All right, let's talk about the CPI we've got on Thursday at 8:30 a.m. We got the CPI. So again, Thursday's a big day because we have jobless claims data and we have CPI data, both of the data points that we need. I'm getting a call here. I'm trying to turn off this ringer. All right, then Friday, big day on Friday. We've got the PPI coming out at 8:30 a.m. And then at 10 a.m., we got the Michigan Consumer Sentiment Report. And then Friday, we got the big kickoff for Q3 earnings, which is going to be the banks, which is going to be JP Morgan, BlackRock, Wells Fargo, and a handful of others. All right, let's take a brief moment. Let's go into the SPY, and I'm going to let you know the lines in the sand to the upside, which signal when we finally are going to get the blow off top, and or to the downside, which signal that we might have a couple more weeks to go down and make a higher low. Where exactly would we stop falling if that's the path we're taking? I'm going to show it to you right now. All right, we're looking at the S&P 500, and what you've got is a cluster of candles that are right underneath all-time highs beneath 575, but there's a pattern here. So let me just show that to you guys. There is a head and shoulders pattern here, okay? And there is a neckline that is somewhere right around this 566.42. Neckline is 566.42 approximately. Pennies matter. And so we could bounce tomorrow and not break beneath this number, and we could remain consolidating and move simply back to the top of the range. Top of the range being somewhere here around 574. But here's the main thing I want you guys to be watching for. If we push below 566.42 tomorrow, and the next day we open and close a candle beneath 566, I can tell you guys that what you do is you take the head distance, top of the head to the neckline, and that becomes your expected move. And what does that do? Well, that brings us right here below 560, okay? And you can also see I've got another pattern here on my chart. This is an area which is a supply zone. It's kind of where the market bounced to go higher and give us that new high. Well, here's the reason why we need to be cautious of it, because if we drop and fulfill this bearish head and shoulders pattern, what we'd likely do is backtest this supply zone at 560, and if we got rejected there, it would give us a stronger move down, putting us potentially all the way down here at 546. Okay. So there is your worst case scenario. And what I'll point out to you is that even though that looks pretty bad, what it would do is this is likely where people would begin to buy again because it would be a higher low. How can the market fall so much and be in an overall bullish trend? Well, it's got a lot to do with what timeline you're looking at. If you always scale out and you look at things on a higher time frame, all of a sudden you realize, man, this thing looks extremely bullish. There's nothing bearish about these monthly candles that each close higher than the next. We haven't even had a red candle in the last 6 months. We haven't even had a single bad month. And so, yes, this is a bullish market. We come back to the daily time frame. The market is going to trade basically a range, and the lowest part of the range the market could still reach and yet remain in a bullish spot that could allow it in the month of November to give us a blow off top. That golden pullback zone is right around 546. Now, we don't get 546 because if we don't get rejected underneath this 560 right there, okay? So if we bounce and we close back above 560, well, then we won't go any lower. We come back up, get rejected at 560 and break this 557 again. You better know that your boy's going to be in puts, because my target after that is going to be this 546. And there's just going to be a ton of money, to go short on the market. And all the while that could potentially be happening, it's still a bullish market. I want to remind you guys, I'm going to be in Maryville, Indiana this week doing a meet and greet stock up with Larry Jones and Chris Sane. Stock Up's event is called Music and Money, and I'm going to be there, and I'm prepared to talk to you guys and to sow into whoever shows up to begin to figure out how to expedite their charting game, their charting journey. That's what I'm going to be focusing on, is helping people learn the charts better at that event, as well as it's just going to be a fun and entertaining event. So make sure you get your ticket for it. This week, I'm going to be doing an open live trade for all levels of the Stocks with Josh Discord. I'm going to be doing it on Wednesday. Now, having said that, I'm flying out Wednesday at around 11 a.m., so it's going to be a tight morning. So we're going to do that live. Then I'm going to be heading out to the airport, and I've got a bunch of travel ahead of me for the next 30 days. I'm going to be out of town, but I'm going to be connected to you guys. So don't miss out on that live trade session, because it's going to give you a peek of what we're doing on Wednesdays and Fridays in Tier 3 of the Chart Goat University. There's a heavy focus on teaching the trade setup that I use every single day to make money, and that I take into consideration every single time I enter or exit a trade. I teach that trade setup. We're going to go through it, and we're going to try to get a winning trade during that session. So make sure you don't miss it. Stocks with Josh, Chart Goat University. It's the personal Discord, but it's not just me. Besides learning to chart there's a ton of people that are devoting a lot of time to help others come up. I've got a number of crown traders. I mentioned Ertuan and Miss Mary are doing this class Sunday nights at 7 p.m. They also tend to highlight what stock they're looking at for the coming week. And so every single one of these channels is backed by someone who's doing a really good job teaching and trading. And so there's so much to pick up there. Hope you guys can come find us over there and join that community. It's a great community. Peace and blessings. We'll see how this market goes tomorrow. You guys got the lines in the sand. We got a bearish head and shoulders pattern currently on the SPY, but it doesn't mean anything until a candle opens and closes beneath 566. Otherwise, we're just trading sideways, consolidating, and the day that we break up above 574, we are off to the races, and the market's telling us that it's time to go to 600 to the upside, which is Goldman Sachs' prediction for this year. So there's a lot of people looking at these charts, not just me, that see a path higher right now. But we're going to take it one day at a time, and we're going to follow the charts. We're not going to get ahead of the trade. We are right now giving Tesla the benefit of the doubt. I'll keep you guys posted on how that trade works out. We had a big week here with Tesla and NVIDIA and these markets, and we'll do it again tomorrow. Peace and blessings. Take care. Bye-bye.